Microsoft, every software company has something called deferred revenue, which is a little bit like I said, a little bit of an advanced concept. Accounting is a very tricky thing in general. When you do accounting, what counts as revenue and how exactly you think about that from an accounting perspective is very different from how you naturally think about it. Like, what's so special about selling a product, right? It's actually very tricky how to determine if a product has actually been sold and when do you book it as revenue. So I'll give you a quick example. You know, if you had a lemonade stand or a bookstore, right? For you, revenue, let's go here real quick. This is, say, your lemonade stand, and instead of billions of dollars, this is just the amount of dollars, right? So you sold $51,000 at your retail store, your coffee shop, whatever you want to call it, lemonade stand. $51,000 of revenue. Then you sold $49,000 revenue the next quarter, et cetera, et cetera. And basically, the revenue for you as a business owner is the revenue for you as a business owner is the revenue for you as a business owner is just basically the revenue that the customer pays you, right? Just gives you the money. But revenue recognition is actually far more complicated than that in the business world, right? So revenue recognition, if you want to learn more about this, you can, it's a good website, see a lot of ads up there, but FASB is the Financial Accounting Standards Board. They actually issue the standards. This is a little probably too complicated. But yeah, RevRec is what we call it in the industry. So you might want to watch some YouTubes on how revenue recognition works.
Due to its size, revenue is the single most important line item in the income statement of most companies.
Yeah, so how does
Revenue when or as a performance obligation is satisfied.
Yeah, so look how complicated this is, right? Whereas if you had a retail
A
store,
performance obligation made it
you might say, okay, well, I don't know, I sold the guy the product for $20, I book my revenue at $20, right? And you keep doing that until you get your revenue for the quarter, which in this case, say, was $50,000, $51,728. It does not work that way in the business world. Very complicated, very different. So you got to think about that a little bit differently. So anyway, I don't want to get into too much detail on revenue recognition, but deferred revenue is kind of like revenue that hasn't been recognized yet, but it's still money that they received. So it's very, very interesting way to book revenue. So a little complicated, not going to go through it right now. But you know, something to keep in the back of your mind. So balance sheet, very important for Microsoft. More important than normally just looking at debt and equity. I'm sorry, debt and cash. Let's keep going here. Taxes. That reminds me, I gotta call my accountants. IRS owes me a little more than $1 million. They're very slow in paying. Pain in the ass, really. All right, lease. Where are my leases? 10774. Yeah, the IRS is always quick to take your money when you owe them, but when they owe you, they what? Who? I don't know him. Who? Shkreli? Nah. Isn't that how it always is? Yeah, I don't follow financials. They're very unusual companies. Yeah, all software companies actually, deferred revenue is quite important because recognizing revenue as a software company is a little bit hellacious. So you have long-term performance obligations. But again, I don't want to get into it too much. It's I don't want to say complicated, but it's definitely dry. Not that I'm trying to be, as I said, I'm going to give you what I do without any extra entertainment, without any extra pizzazz, without, I mean, I could sit here and raise my voice and scream and make this interesting, but, you know, one, it's an insulting to the profession, it's insulting to me. Two, it would be lying, you know, which is something I don't do, despite having gone to prison for it. So if it's too boring, find another place, you know, it'd be more exciting, but I think a lot less informative. Did I screw this up? No, I don't think so. Good. Let me do free cash flow here. Free cash flow is sort of a self-defined concept. Mainly it's cash flow from operations minus capex. In this case it's plus capex because it's a negative number. But it looks like we got very different situation picture for Q1. The December quarter usually is a cash consuming quarter. So anyway, you've got 28,661. So that's 57 billion, say, for annualized. Yeah, 32 times, not cheap at all. Again, we need to get a full year kind of estimate, so. Deferred revenue, somebody gives you an IOU in exchange for goods. No, not quite. Not quite. In fact, you're 100% wrong. Shouldn't spread misinformation. Should not spread misinformation. I did take effects in jail. In fact, I hope I have some right here. I do. Yeah, so revenue, I guess the first thing to recognize about revenue, no pun intended, one thing about revenue is it's completely independent of whether or not you've collected the money, which is, again, is not the way we normally think of that, right? So let's go back to our t-shirt store. You're selling t-shirts in New York City, popular t-shirts called Supreme brand t-shirts. Your t-shirt brand's called D's. So anyway, D's t-shirts, and you sold $49,360 of D's t-shirts because you gave people $20 at a time, $49,000 worth of D's t-shirts, right? The problem is, in the business world, and you got paid $49,000 in cash. The problem is in the business world, you book revenue when you invoice and title transfers, not when you get collections. That's down here. That's called accounts receivable. That's completely different and separate concept. So just something to keep in mind there. GAAP and non-GAAP is a very good good conversation to have. We'll have that later, though. For Microsoft, it's interesting. GAAP and non-GAAP are the same thing.